up on Business Incorporated. South Africa raises 1.5 trillion rand in investment pledges, exceeding the initial 1.2 trillion investment target set in 2018. As the US dollar tumbles to a one-year low against a basket of currencies as cooling inflation raises Fed pause expectations. And gold prices edge higher today, set for a second consecutive weekly gain. Hello, welcome to the program. I'm Ladi Williams. First off, let's take a look at what's happening in the markets we track right here at Intraday. We see on the African continent, it's mostly positive sentiment we have there, but the NGX there still trying to decide where to go at Intraday. 0.01% marginal loss is what we have there. And South Africa, you see it's up 0.73%. 79,034 for the all-share index. Moving on to other parts we track right here in Africa, North Africa, there we see Egypt, they're closing big, they're 5.55% up yesterday. Big close there, while Kenya closed negative, down 1.30%, 111 points for the all-share index. Moving on to the Middle East now, we see the markets trading right now. That's Abu Dhabi in the UAE and the Dubai index. That's in positive territory. Abu Dhabi up 0.68%, and we see Dubai index there 0.13% up. Other markets we track there, the close. Saudi Arabia did close yesterday up 0.27%, and the Qatari index was down over 1% yesterday. And moving on to Europe now, it's a historic week in Germany as the country shuts down its last 3 nuclear power plants on Saturday. We have Lars Holter right there in Berlin. Great to have you, Lars. So is this really the end of nuclear power for Germany?
Yes, thanks for having me. Yes, it is the end of nuclear power in Germany. And it should have come a few months earlier, actually. But when Russia started its war in Ukraine, that led to an immediate energy crisis in Germany, where Russian gas had been a major energy source. Now, that got cut, oil as well. And Berlin decided to leave the last 3 nuclear power plants running for just a little bit longer. Now, those 3 plants are run by the 3 different energy providers here in the country, and they are spread across the entire country, too. They're the last 3 out of what was once 17 nuclear power plants. Back in the old days, those 17 plants produced over 20,000 megawatts of power. Now the last ones are down to 4,000 megawatts, and that makes up 6% of Germany's energy mix.
And there's been a lot of controversy over shutting down those last power plants. Why is that?
Well, it's an interesting conflict here. Germany has had a strong anti-nuclear movement since the 1980s. It really took off after the nuclear catastrophe in Chernobyl, and it was also strengthened in 2011 after Fukushima. People felt, and so did a large part of the government, that nuclear energy was too big a risk. And I'm sure most people agree that nuclear is not something we should rely on. Generally, to date, it is unclear where the fuel rods and other radioactive waste from all these plants is supposed to go. It will be highly hazardous for hundreds of thousands of years, after all. But all the risk that comes with nuclear energy has been countered in recent years by a huge benefit. Nuclear energy is carbon neutral. And since climate change has become the world's biggest problem, and since cutting down on carbon emissions has become a major goal, you just got to wonder, shouldn't we let the nuclear power plants go on instead of replacing their output with power generated using coal and natural gas? Because that contributes massively to global warming. So now some of the very people who once went to the streets to protest against nuclear have come around to support it and maybe see it as the lesser of 2 evils. Also, there is the problem with high energy prices. Analysts have said that if we kept nuclear going for now, it could lead to a price drop of anywhere between 4 and up to 13%.
So where's Germany getting its power from in the future?
Well, there would be partially coal and gas. Coal contributing a full 33% to Germany's energy mix, and gas another 11%. But it's also renewables with almost half of the energy mix right now. And obviously, there's a considerable effort to increase renewables, mostly wind and solar. But the process has been very slow for years, with wind turbines, for example, taking a long time to even be approved. It's that old NIMBY problem, not in my backyard. People want turbines signs up, but they don't want them where they can actually see them. And that has led to Germany expanding its wind power generation at a snail's pace. In future, offshore is supposed to change the picture here, but we're talking years to developing and building up that infrastructure.
All right, thank you so much. That was Lars Holter right there in Berlin. Tell us about those nuclear power plants there going to be shut down in Germany. Moving on to the global commodities market now. We see price movement this week in the oil market. We see Brent crude futures there climb about 34 cents, about 0.39% up to $86.43 per barrel, while the U.S. WTI crude futures, that rose about 40 cents to $82.56. To the metals market, we see spot gold, that was up 0.2% to $2,044 per ounce, hovering near a one-year high reached, that was yesterday. So U.S. gold futures rose 0.2% to $2,059. Let's talk to Sunil Dixit now, Chief Technical Strategist, SK Charting. Join us from Kolkata. Great to have you.
Thanks.
So quite an interesting movement there. We see prices this week in the oil market. What prices should we be looking out for, at this point, looking at support and resistance in those oil prices?
Well, in WTI particularly, I'd say prices have been getting support from 50-week EMA 82.60, and below that 5-day EMA 81.80 is a good support, and oil is waiting for some fresh triggers to move higher. The next level up would be 100-week SMA, that is 84.80. But all said and done, we can remember a couple of days ago, in fact, a week ago, there was a gap up, massive gap up. That gap still remains to be filled. And that gap sits at 75.70, and these significant gaps have to be filled in eventually, later or sooner, as I had said last time as well.
And what are you seeing for oil prices next week?
I think as long as on the higher side, we do not get a weekly close above 83, we can expect some pullback towards support levels, horizontal support levels, that 81.80 or even below that. Some pullback downwards can help oil to fill the gap. And still on the higher side, the range-bound activity can always keep fluctuating prices between 83 to, on the downside, to 80.
Looking at the metals market now, we've seen gold, that's managed to stay above $2,000 for a while now. What are you expecting, going forward? Do you think the catalyst is still there to keep gold going up?
There is much energy in gold left now. In the near term, people are waiting for a retest of a historic high in spot gold, 2073. But before that, there can be some pullback, some exhaustion around 2055 to 2060 levels before the all-time high of 2073 is tested. And some pullback towards support, 5-day EMA 2023 can be tested.
All right, well, I guess we'll be looking out for those prices next week and what's going to drive most of those prices. But as you did say, gold is quite hot at this time. Thank you so much, Sunil Dixit, Chief Technical Strategist, SK Charting. Thank you.
That's welcome.
All right, let's take a look at what's happening in U.S. markets now. We see right there, stock futures slipped a bit, today as investors look out for a fresh batch of corporate earnings coming out right there. See behind me, it's all red for the U.S. Futures markets there. Dow Jones Industrial Average down 0.21%, and the tech-heavy NASDAQ, that's also down about 0.32%. But let's get a summary of yesterday's close from our correspondent, Maria Bird.
The U.S. stock market showed a major rebound on Thursday as the Dow Jones was up by 1.14%, the S&P 500 up by 1.33%, and the heavy-tech NASDAQ up by 1.99%. Many investors are expecting that Friday's bank earnings reports are going to come out strong, and this could have a positive impact on the U.S. stock market. It is also clear the Federal Reserve may not be increasing interest rates at the same rate we thought previously, as we're showing moderate inflation over the past few weeks. The job market analysis are also saying that there's a tightening in the job market. Even though jobless claims are up, there are also less job openings, which is showing that the U.S. economy could be coming out of what appeared to be a slight recession.
And that was our correspondent there, Mary Bird, giving us yesterday's close in the U.S. markets. Now, we see South Africa's raised 1.5 trillion rands in investment pledges, exceeding the initial 1.2 trillion investment target set in 2018 by President Cyril Ramaphosa. Despite worries about policy, power, and other infrastructure challenges, 25% more investment promises were made at the country's 2023 investment conference. Our correspondent, Innocent Simosa, reports.
Since the first investment conference in 2018, South Africa has attracted 1.14 trillion rands in pledges. This translates to 95% of the initial investment goal. President Cyril Ramaphosa addressed delegates on the importance of investing in South Africa.
This year's conference is an opportunity to reflect on the progress that we have made to achieve that goal. Given the state of the economy in 2018, and given that we were emerging from a decade of state capture, many thought it was an unattainable target.
The conference also hosted several panel discussions on topics such as infrastructure development, renewable energy, and innovation. At the center of much attention, it was the Minister of Electricity, Hosiyentu Ramogopa, who spoke about the Energy Action Plan.
We already have adopted the Energy Action Plan, which has got 5 pillars as its outcomes. The first one is to fix Eskom and ensure that we increase the energy availability factor. So essentially making sure that we stick to philosophy maintenance, we address the issues of outage slips, and by that I mean when we make a promise to take out the unit to say we're going to return it by this date, we need to keep to that date.
Experts in their respective fields shared insights and ideas on how to drive investment in different areas.
They choose South Africa because of a whole host of combinations. That does not mean that there are not challenges. And we've heard the speakers talk about them, including President Ramaphosa himself. So the question is how those challenges are being addressed.
Are you investing? Are you doing a pledge today?
No, I'm not doing a pledge, but definitely I've got a lot of opportunities that are currently active in the infrastructure space. I mean, we're very much property developers, and we're here with regards to partnerships that we have and relationships that we've created around land. But no pledges that I've done because I've already got a 1 billion portfolio that I'm currently running successfully in terms of building smaller towns.
We are starting a new coal mine, thermal coal mine, which will produce 200,000 tonne a month, and we will employ 400 people. And we started actually investing about 4 months ago, and it will be operational in September.
Of the 152 investment announcements made previously, 45 projects have been completed, while a further 57 projects are currently under construction. But some still worry that some pledges might not turn into actual investments.
There's been progress, especially with respect to the objective of this conference, which was to realize the target of 1.2 trillion that President Ramaphosa had set for himself and his government to attract as foreign direct investment. As you know, FDI is very important for us on the continent because we don't always have the capital to invest in all the initiatives that are required in order to grow our economies and create jobs and address the big African problem of poverty.
By the conclusion of the gathering, the president was able to confirm investment commitments for the period of 1.51 trillion rands and covering a diverse range of activities from telecommunications, mining and manufacturing to economic and social infrastructure. Well, given the track record of the South African Investment Conference, we have witnessed over the years that pledges that are made here sometimes are not followed through. At times they come with empty timelines, which makes it difficult for implementation. Well, it remains to be seen whether or not this kind of program will yield positive results for the country. From Johannesburg, South Africa, Innocent Simos, Channel Television News.
All right, we'll take a break now. When we come back, we'll get an outlook for the South African economy. That's our next conversation. Do stay with us. Welcome back. Well, the South African private sector economic activity contracted in March as the country is dealing with power outages. Let's get an outlook now for the economy with Matt Kindiger, practice leader, Sub-Saharan Africa Frontier View. Join us via Zoom. Great to have you on the show.
Hi, thanks for having me on the show today.
So, Matt, what has caused this decline in private sector activity and sentiment in South Africa?
Yeah, so there have been several factors in our view in terms of curtailing private sector activity, especially industrial activity and sentiment. So obviously the first one, the big one, is load shedding and power shortages in South Africa. This is the most important factor, and we're seeing industrial activity in particular really beginning to suffer. Manufacturing, construction, the mining industries are all starting to face increasingly widespread disruption from power shortages. They had been relatively insulated.
South Africa, Eskom. And how long do you expect the current power shortages to continue for?
So we would expect the power shortages to continue for, the foreseeable future. So we would expect to see power shortages probably to get a bit worse before they get better. Our base case view is that the government will struggle to improve power sector availability for at least the next year, maybe 2 years. There have been significant improvements in investments into independent power production. However, we are unlikely to see this result in a meaningful difference in power availability. Load shedding is probably going to get worse over the course of the winter, over the next few months. And we are probably going to see certain municipalities be worse affected than others. So, for example, the city of Cape Town will make more progress in terms of being able to procure power independently. But the certain municipalities, but also industries, will really struggle. There's also a risk of, even worse load shedding coming over the next 6 months or so, and this could result in much more disruption to telecommunications infrastructure, water supplies as well. So certainly, we would expect things to get a lot worse before they get better.
And last time I checked, I think they got to about stage 6, looking at the load shedding there. But what impact will all of this have on the country's economic growth outlook?
So generally, not great. So our view is that, our current view is that the economy will grow by about 1.1% this year. However, we are most likely going to be downgrading that growth forecast to closer to 0.5% or maybe even 0%. So effectively, we could see stagnation. And this is because mainly the effects of load shedding will be so severe on South Africa's industrial base that there will be no choice but for industrial companies to start to reduce production. We're also going to see a relatively weak consumer environment as well. Inflation is falling, but it is quite sticky in South Africa. We've actually seen the inflation rate rise over the last month, and producer price inflation, which is a measure of costs for businesses, is actually double that of headline inflation. So businesses are really struggling when it comes to being able to manage their costs and protect their margins. So we're not particularly optimistic in terms of the growth outlook over the next year or so. And there's also the big question of what will the impact of the election next year be on private sector sentiment. Probably a relatively negative one, especially if the ANC fails to secure a majority at the election as well. So a number of things that will be curtailing South Africa's growth outlook over the next 12 months.
Yeah, and definitely, households and businesses are definitely going through a lot, with all this power cuts. But what options are available to households and businesses at this time? I'm talking about sources of power.
Yeah, so in terms of sources of power, I mean, what we're hearing is a lot of companies are investing in generators. So big, large-scale industrial backup diesel generators are the most popular option for bigger organizations, but they are incredibly expensive to run, especially because oil prices at the moment, global oil prices are very high. There is also a booming industry when it comes to solar panels and inverters in South Africa. So solar technology has become a lot cheaper over the last few years, but it is still quite expensive, and the ability of solar power to compensate for Eskom main grid suppliers is quite limited. And there's also a massive backlog in terms of being able to procure solar panels. My own family in South Africa has said there's a 6-month waiting list for being able to install new solar panels at home. So certainly limited supplies. We're also seeing just changes in what companies are doing, what they're producing, the services that they're offering as well in response to much higher energy costs, as well as just limited supplies. So a number of things companies are doing to try to manage this.
And the alternatives always more expensive. Thank you so much. That was Matt Kindiger there, practice leader, Sub-Saharan Africa Frontier View. Thank you. All right, now moving on to other markets now. We see $252 million. That's the total value of cashew nuts exported in 2022, according to the Nigeria Export Promotion Council. The NEPC notes that the rise in earnings follows the launch of the Organic Cashew Certification Program, while projecting a $500 million revenue in 2023. Take a listen.
Leading non-oil exportable product in Nigeria in the 2022 non-oil export performance report. In the year under review, Nigeria exported 315,677 metric tons of raw cashew nut, worth $282 million US. That's in 2022, which accounted for 5.24% of Nigerian non-oil performance for last year. But sadly, we have not maximized and harnessed the full economic potential inherent in cashew export. Nigeria's cashew export is largely hampered by non-adherence to the full safety standard, lack of traceability, low yield per hectare, poor practices, aging trees, etc. And most of our cashew exports are in primary form. Export of processed cashew kernel is very low and accounts for about 16% of cashew export. Also, the primary cashew produce export is mostly the conventional and not the organic certified cashew.
And that's it on Business Incorporated. Thank you so much for watching. I'm Ladi Williams. Enjoy the weekend.